Hey traders, so welcome to the daily macro review. It's almost 5 o'clock here in Chicago in the afternoon. We are on the 22nd of February, and this video is not only for the Pro Room, but it is for YouTube as well. So I'll be sharing this one. It is Wednesday. I have not done a macro cafe last Saturday, but I will try to put one in this weekend. Okay, so we're going to go ahead and take a look at the markets overall, at the macro markets. And before we jump onto the price section in here, I want to, for those that are new to this channel or that, don't know kind of what we're doing, where we are, here is where you can find me on Twitter at EWCafe. You will find different charts and posts up in here. You can also find me on Telegram. This is basically the private program that I have, and this is kind of what we do. You can see that in here. You can come, there is a link below this video that will take you to the bot. You just press menu in here, plans, and we'll kind of show you what's up in there, and then you can look at the terms of service. You can see kind of what we offer, and you can take a 30-day free trial if you wish. All right, let's continue to go in here. Also, I wanted to show you the Pigeon and the Statue newsletter. This is basically, I have daily updates on the markets and then a weekly wrap that's called the Strong Pigeon Report. So you can subscribe right here at EWCafe.substack.com. And we'll go through this letter today a little bit in detail to kind of show you some of the counts and things that I'm seeing on the market. So let's begin with the macro listing here and take a look at the price section. I mean, we've had a pretty a good month of January. You could see that since the beginning of the year, we've enjoyed a pretty good rally. We've broken above this massive trend line that's coming from the end of 2021, 2022. And, we're kind of coming back here and trying to retest some of these levels. So this is the month of February. It's a pretty negative month. Overall, even seasonally, it's not the best time to be really bullish on the market. So we've been kind of pulling back a little bit in here. I think it's a corrective move. And we're coming in, kind of finding a little bit of a support near the 50-day moving average along with this trend line that's in here. Now we've had, several days of selling today. They tried to sell lower again, but it was more of an inside candle in here without a lot of action, even though we've had the FOMC minutes earlier today, but they pretty much repeated more of the same. The accumulation distribution here continues to be to the upside, which means that there is an interest here for the S&P 500 to be accumulated. So, that's a positive sign. I have, a little bit of a concern here with the MACD that's pulling a little bit lower towards the zero line. If we stay above there, I think we're still, looking fairly positive. And then the RSI is dropping into 40, which is levels where usually the markets kind of get bought in an uptrending environment, which we seem to be in, since October 13. So that's the S&P 500. We'll take a look at the counts as well, but I'm going to go first through this overall view in terms of the daily patterns, price action, kind of how everything looks a little bit longer term in here. So very important, I think, that we hold this $4,000 level, and 3,900 would be kind of as low as I would accept this market to kind of travel still, but anything lower than that, it starts to be problematic for the uptrend. Now let's take a look at the Nasdaq in here, which is coming back into some strong horizontal support that sits at about 12,000 in here. So that's a pretty big psychological number. We are still far away from this trend line that we broke back in between 23rd and 24th of February, but we are above the 200-day moving average, above the 50-day moving average, slightly below the 20. So you can see that the support here, it's been tested numerous times, and here we are again trying to kind of hold it. And we did make a new low, but we did not close at the low. So the market was doing fairly okay in the end of the day. And Nvidia, might push the markets green tomorrow. We'll see how we go, but it had pretty good earnings and it's been pushing higher, so it could help the Nasdaq try to stage maybe a stronger opening in the morning. Nasdaq Composite, it's on a kind of a similar path and situation in here, bouncing from the 200-day moving average. I mean, these are good entries, guys, for low risk reward. As long as you're above the 200 with stops below or below the 50, this could be, decent points to, enjoy a move back to the upside. I mean, the risk reward is pretty low in here, and it looks like you have what looks to be a corrective move lower. So I kind of like these patterns. Dow Jones, it hasn't been doing a whole lot. I mean, ever since the end of December in here, even during the month of January, it's kind of, I mean, they had a little bit of a push, but not as strong as some of the other indices, and it's been mostly sideways. I mean, it had a pretty good advance from October to December, and then it just kind of went sideways without a lot of trend. You can see the moving averages are just kind of, we're above the 200-day. Which is good. I mean, this is a pretty big support at 32, about 33K, 32,800. You know, we bounced a little bit today, but we did make a new low, a new closing low. You know, but there's not much to do here. I mean, I'll show you the counts. There could be some kind of a 3, and then maybe down in 5, maybe some kind of a flat move, and then we go higher. It's kind of tough to judge it. But I'm waiting for some of these key levels to kind of start to get challenged before I you know, get more conviction one way or another. But overall, you know, it's still holding pretty well, and I think that this will probably resume to the upside. IWM in here, so Russell 2K, the smaller caps, again, just massive break above this trend line. We're nowhere near actually retesting this. We have an ascending 50-day moving average, a crossover between the 50 and the 200, coming back and retesting a nice horizontal line here at about 188, and what looks to be just a 3-wave move so far. So, you know, again, something that could be encouraging. If we're able to break back above 195, I think that we're going to resume the uptrend in here. Anything that gets towards the trend line below it in here, maybe below 177, I think that starts to look like we might have some issue on our hands, and then they could open the door for further downside. Bitcoin, you know, it enjoyed a massive rally here at the beginning of the year. So in the month of January, then since February, it kind of took a pause, made one more high, and you'll see into the updates, we're looking at this. I mean, either a completed 1, 2, 3, 4, 5, or wave 1 of 5 with the possibility of continuing higher, or maybe, you know, the beginning of a much larger impulse. So for that, I'm looking at several levels. We're still seem to be closing or staying above this first one. That's about 23,800. There's another one below at about 23,400, along with the 20-day moving average, and anywhere below 61% of this move, we can start to get into some issues and sell-offs, maybe back towards 21,500. And then there are some levels that I'm watching that if we're going to break below, then, you know, there's a larger risk present. But for now, I think Bitcoin remains pretty strong in here in a pretty good uptrend, and pending some corrections, I think it should continue to go higher. TLT, it's been coming down, bonds have been coming down, and you can see in here yields have been climbing. Now there's an inverse relationship between the yields, 10-year, you know, 2-year, but especially the 10 and the stock market. This is the S&P. As the yields go higher, stock market goes lower. As the yields go lower, stock market goes higher. And, you know, with the latest increase in yields here from 3.4 to 3.9, you know, since the beginning of February, you know, we've gotten quite a bit of a pullback here back in the market. So, you know, it's important. I mean, yields are coming into some important resistance here at about 4%. And if we're able to hold these and not break above it, I think this could, you know, get the markets to move back to the upside. I think we're at a pretty good juncture here in terms of yields. US dollar, you know, we were looking for this rally, you know, once it finished this fifth wave, we were kind of all over it with the members, you know, as we was making these lows in here, we were kind of counting this decline, and we were preparing for a little bit of a upside move, and you know, my updates kind of showed that we're looking for a little bit of an ABC for a continuous move, maybe back towards 105.50, maybe even 106. You know, one thing that I'm kind of thinking, I mean, we're right into the 60 RSI, and usually in downtrends, you know, the markets are going to find a way to kind of sell those. So I'm curious what's going to happen here. If we do sell lower, that should help the markets. But again, this could become more of a complex move, and it could continue. Even if it goes lower, it doesn't mean that you're going to crash below 101. It just means that you might do an X wave or some kind of a, you know, maybe a triangle, and then push higher still. So it could be more of a sideways consolidation. Gold has been responding pretty well from our levels. We've been tracking it with members, you know, really well since we made this high. We called this bearish candle, and we shorted the markets via GLD and GDX. So we took some nice profits into this decline, and now it's holding back towards 1825, and I'm waiting for it to kind of start to travel a little bit back higher, back maybe towards, I don't know, 1860, 1870, back towards this moving averages, maybe even towards 1900 in some kind of a three-wave move. Maybe with the move lower in the dollar, move higher in stocks and Bitcoin, and maybe, gold can also enjoy a little bit of a move. And then I still think that this correction here is not enough to correct this entire advance. So we should be traveling a little bit lower towards June, July. Copper has been acting pretty well also, and not really responding to this latest sell-off in the markets, and shows, there's still an appetite for growth in here. And you could see a bunch of, emerging markets and European markets are making new highs, and that's, looking fairly good. Crude oil is not doing much. It's just been in a big sideways consolidation. I mean, it does look like, from this perspective that it wants to break lower, but it tried several times. So until it actually gets below 72.5, I don't have a big conviction. I actually stayed away from oil for the good part of the end of last year and the beginning of this year. I don't have any interest in picking up into this mess. And then EFI in here kind of coming a little bit back, 69.84. But I think there's probably going to be some opportunities here at the 50-day moving average. And then VIX, it tried to rally, scared, just kind of scared the market a little bit in here with the climb towards 24, rejection from now, and we're below this 200-day moving average. So, VIX is it's still elevated, so we need to see a bit more rejection to the downside and a fall below 21, to be more confident that the markets could continue to climb higher. So that's just an overall view of just our basic, overall coverage of the core markets. And then, if we dived in a little bit in this daily drip, so every single morning between 5 and 7:30, I'm kind of working on this one and putting it out there for you guys. It's just, an overall view of the counts, kind of what happened overnight, what the futures are looking for before the markets open. I usually start with, a little bit of economic just calendar to see what's going to happen today. So, for example, we had the FOMC minutes, and then we have a Fed speech that's probably in about 25 minutes, 28 minutes here. We'll see what he's going to say. And then tomorrow we're going to get some jobless claims at 7:30, and then some GDP. Bostic is going to speak. So, a little bit of a volatile day probably also. Then just looking at the S&P 500 at the counts, I'm not going to read this. You can go ahead and there's going to be a link below this video to this newsletter as well. So you can check that out and subscribe to it if you want. It's just going to come into your mail every single morning. So, this is the S&P 500, basically the counts, the bullish count that I have. And I'm not going to revert back to the bearish until I'm noticing, more breaks below 3,900 and 3,763. If that happens, then we will revert to this whole move as being an ABC move. Until then, I think there's a pretty good confluence here again between the declining trend line, which this one could be a little bit off, but, and then an uptrending channel. Along with some important fibs in here, and I think, there's a decent chance that we could probably travel higher. Now, I'm not too happy with this ABC in here in this wave Y. I think it's still a bit aggressive, so it might be maybe wave A of Y. We're going to get a B and then another C maybe. There's a bit more room to go, but in terms of, proportionality with this wave 1, I would really not want this pullback to last too long. The longer it lasts, the worse is going to look for, for this being part of a correction as part of an impulse. So, that's what I'm going to watch it, and we'll update it in the morning, see kind of how it looks. But I'll keep it as a WXY for right now. And then here is the, kind of what the markets was this morning, approaching that 50-day moving average. And I said I think there's a decent chance that we're going to get some bounces today. We did get a bounce and then sold off, but we closed pretty positive. So here is NASDAQ again, the count up there. It did not change a whole lot since this morning, but basically, a big impulse into 12,900, then an ABCX. and a little bit more of an awkward ABC. So it's possible that that's A. You're going to get another B and then another C maybe, and then still, come lower maybe into beginning of March or something like that. So, I'm not ready to kind of call this, necessarily just a clean ABC. I need to see more. But if you're getting, see, this kind of how I look at it. If you're getting above this B wave high and you're starting to break above some of this lines in here, then I don't think that's going to be, I think that's going to be, the beginning of a next impulse to the upside. Okay. And it matters kind of how that happens. If it's impulsive, right, then we know that possibly we can secure a wave 2 lows up into those levels. Here is the resistance that we talked about. Here is Dow 30, with a pretty, I say, I don't know, complex kind of sideways move. This looks clean as an impulse. Then I was thinking maybe it's a running flat, but if it was going to be a running flat, we should have gone already much higher because, that means that the market rushes to the upside. So, what I think that maybe it's happening in here, this is some kind of an ABC in here, although I don't even know, or maybe there is some kind of a flat in here in a wave A, then you're getting maybe some kind of a triangle in a B wave. So you get an A, triangle B, and then down in C, maybe some kind of a WXY complex move, a double 3 or something like that. But we'll adjust it as more data comes in. There's no point in guessing too much. I know that if we're breaking about 34,372, there's a chance that this rally can continue, and then we're ready to kind of tap onto the longs. And then, if we're kind of coming back in here, then I know what levels to watch for support, and then we can adjust some of these counts. So Dow is more of a kind of wait, a hold for me until I get, better indication from price. Here's US dollar. I think this is pretty clean. So you got a 4 and a 5, and then you have a pretty good impulse here in A. You got an ABC, and more of an awkward kind of a C wave. I don't know if this is done or we're doing some kind of an ending diagonal in a C wave in some kind of a 1, 2, 3, 4, 5, because it can continue to travel, into something like that and just kind of finish off somewhere up in there. And then you begin the next decline. Another way that this could unfold is that, this was it. You're getting this some kind of a, 1, 2, 3, 4, 5 in here. And then, you get an X wave. And then you go back up again. The dollar could be, a little bit tricky, but I don't think, that then again that, several months since September to, basically whatever this was, the end of, December when we found this low in January, that this is a, that this entire move is corrected by this move. All right. If it is indeed a correction that does not belong, to this decline, right? If it's on its own rights, then, it should take more time to unfold in here, being this way or being a little bit more directional. It should probably take, again, maybe several months to unfold, 2-3 months maybe to go sideways to upwards in the dollar, kind of trending like that. If we're breaking straight away lower, then, then I think that this rally in here, it's still part of this decline, and maybe there's another fourth wave forming or something like that. So the reason why I'm looking at the dollar every morning and every day is because obviously higher dollar, it's a negative for risk, and it can provide pretty good clues in kind of what not to do or what to do in the markets with how aggressive can you really get. Here's gold again, the decline 1, 2, 3, 4, 5, and then today it pushed back to the upside, and actually this was this morning. Let me check the gold market. Sorry to jump here on my futures, but now it actually came back lower a little bit. So if we're holding here as an ABC, then that's an AB, and then up in the C wave. So it looks like we came, just slightly back like that. So again, it could be an A, B up in C, it becomes a W, then you do an X, and then another A, B, C, higher, maybe back towards this level, just kind of like in dollar. That's kind of what we're looking for, because this level in gold, it's massive, right there. I showed you just before as well, and that's the little bit of a hammer that we've gotten in it. If we close below these levels, guys, then gold is likely to travel towards the 200-day moving average, which sits at about 1780. you know. So overall, for me, I'm a little bit, you know, let's say neutral to bullish a little bit on gold here over the next several weeks. Silver again, just starting to push a little bit higher here. That's similar to gold. Just you know, just looking here at the WXY was or an ABC back maybe towards 23, and here is the rejection from you know, these strong levels in here between 21 and 20. You can see that the market has been all over these levels in the past since the summer of 2022. So that's where silver is. And then Bitcoin, it's still struggling in here. I mean, it doesn't do, it's not doing a whole lot. It's just kind of consolidating sideways. And the idea is that, you know, you already completed, I mean, you satisfied, you know, the requirement for a fifth wave by overtaking, you know, the orthodox high of a wave 3, even though like right there. And then you made a wave 5. So, you know, that looks okay, like 1, 2, 1, 2, 3, 4, 5, maybe another 4 and another 5. And we're doing maybe some kind of a flat in here. Maybe we'll go a little bit more and still come back. So either this wave 5 is completed or it's still working itself out. Okay, and you know, there would be that, and then with the correction lower. But I do want Bitcoin to stay above 22,800. This 22,800 zone, I think it's important because that is part of the trend line in here. It's the entire fib, you know, pullback of this entire rally in here. No matter if you take it there, if you take it here, it's the same levels. It's going to give you pretty much a similar fib. And as you're approaching 23,400, that's a good level. So somewhere in this neighborhood, you know, if it continues to drop, you know, we should we should hold and then see if we can squeeze back up higher. And if we do, you know, that means that all of this was a correction and we're ready to begin the next advance. And that next advance can take us towards 30K. I don't have it in this one, but I think I have it into the previous letter. I'm going to show you that quickly and then we'll come back. So yesterday I think I presented in Bitcoin a weekly chart right here. So here is the weekly chart that we're holding below this 25K because you have basically, you know, the highs from the summer of 2022. And then if we can close on a weekly basis back above these levels, you know, then the next obvious levels will be towards 30,000. And that's probably where we're going to go. But right here you have the 50 and then you have the 200 week moving average, you know, providing resistance in prices. So back to this, and I'm going to try to finish off here. You know, for right now, you know, that's the support. And if you look at an updated chart, we're probably trading right there at about, you know, 23.4, something like that. We're pushed a little bit lower. And, you know, if we're able to hold that, then, you know, and try to squeeze back to the upside a little bit, you know, basically back above 24,800. That would be good. Let me see if I can pull a live chart of Bitcoin here. Oh, I can do that. Look. So the market basically, let's see what was the low there. 23,581. So just slightly above 23,444, and we're actually pushing higher. Now, if we can climb back above 24, let me adjust this because that's another level now. 24,622 because we made another low. So 61.8 is 24,622. If we can get back above there, I think the bears might start to have some issues, right? Because you've tried, you know, quite a few times to break to 25, you couldn't. But if you can continue to try one more time, maybe that's what's going on, and then we can secure a wave 2 low. And look for the next advance to the upside. You know, if we're turning back, you know, from these levels back here, and we're starting to kind of, or do maybe a simple ABC correction, that's another way to kind of look at this, right? You're doing an A, B, maybe a wave C like that, you know, then you can start to get ready for the next leg lower, which will come back here. And that's where we're going to watch for the next opportunities and for next levels of you know, interest, like, you know, because that will coincide with this support back there too, right below 23K. So, and then you can do that. All right, guys. So anything below these levels are going to start to look ugly. You're going to break, you're going to retest, and we're going to continue lower. So that's my overall view for today. So again, I thanks everybody for watching. Don't forget to visit me on Twitter. Don't forget to subscribe to the newsletter. Every single day you get updates on these markets. And then don't forget to visit me on Telegram as well. Take a 30-day trial, see how you feel, see what we do, and if you decide to, if you like it, you can stick around. All right, guys, I'll leave it at that, and I'll be talking to you a bit later. Bye bye.